Hello and welcome to another update video about DOT. Yeah, on the DOT chart, the market is still holding this key support area. This is here the daily chart. Yeah, we want to just make sure that it's clear that the $5.70 level is still key support. And as long as we're holding it, we can get that one more high that we're waiting for. That would be wave 5 of C and it should form a long-term top. The price should, not only could, form a long-term top there. 1393, I'd like to see that one reached, maybe 1657. And we just have to say, we don't want to rely on prediction. So we don't say the top will be there. We have to see if the market shows any reaction. Yeah, in the white scenario, I would expect that. If it goes any higher, it will probably morph into something different, maybe the yellow count or an extension of this white C wave, which would be possible as well. But overall, I think we should still see one more high. That's what I'm watching for from here. And this is the support area we've been talking about throughout December and January. So it's good that we start to see here a little bit of a reaction. Specifically, we see that reaction on the smaller time frame. So let's take a look at that smaller time frame for DOT. That detailed wave count, you can see it here. Current thesis is that this wave 4 that I showed you bottomed here on the 13th of January. That was Monday. A lot of coins formed potentially local lows on that day. And the idea is now, we're pushing higher, at least as long as the price is holding above support. We can adjust a micro support area. I'll show you the key levels now, and I'll tell you what the pattern could produce here. Certainly, I can tell you this looks like a first micro 5-wave move up. That's all we need to see. We need a 5-wave move up and a break above initial resistance. The initial resistance level was here around $6.80. Talked about that, level broke in 5 waves. That's what we want to see. And all we need to do then is to identify the relevant key levels that we can, that we need for upside trend continuation, and we can focus on higher. Zoomed in, we can identify the first 5-wave move up in more detail. This might have already been a wave 2, but then the third wave isn't exactly impulsive yet. There's not really any micro count I can add. Maybe there's another 1-2 setup, maybe. My view is that, as long as this intraday, yesterday's low is holding at 686, the market might push higher more directly. Third wave target, if this really is a third wave already, it should get to 875, but it might take a different route. What is possible is that if this gets an overlapping mess, then wave 1 will sit up here. So I think for now, what we can do, we can adjust the support area to reflect this. And micro support, this is really just micro support. It's not so relevant. It is for short-term upside continuation, yeah. And this is just really a standard Fibonacci support area. And it's between 684 and 630. So we can say that, bottom line is, as long as we're holding 630, the trend is up. In the very short term, however, the nearest support level is this red line, which is located here at the wave 2 low at 684. So as long as that's holding, direct upside, yeah. A break below it is needed to suggest that a wider wave 2 is unfolding. So I would say it could be 1 question mark, right? Larger wave 1 and a larger wave 2. But that sometimes doesn't happen when the market is bullish. Essentially, we want the market to go up, right? We spent a lot of time in that larger support region. So that's currently what I'm tracking. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.